The first chapter, time value of money, little bit innocency, and 5% attention, 75% thinking about a home. Thereafter, gradually in investment decision, 50% class and 50% home. Now also you will think about home only. Once the syllabus is finished, you would be cleared. See, advanced concept came means get ready with yellow water. Okay? Means get ready for battle. That is nothing but to handle public exam, right? Yeah. Dear students, what is a capital budgeting? Well, we know that capital budgeting is a systematic planning to make investment on fixed asset. See, financial management is the subject of decision making. There are three major decisions of the financial management. Number one, financing decision. Number two, investment decision. Number three, dividend decision. So in investment decision, we used to learn what is the strategy, what is the technique to make investment on a fixed asset. And at the same time, we used to learn how to make investment on current assets. So we studied working capital management. That is a subject with respect to how to make investment on what asset? Current assets. Fixed asset. How to make investment on fixed asset. So in order to know how to make investment on fixed asset, we learned various methods. That methods of capital budgeting being classified into two types: traditional methods, modern method. Traditional method ignores time value of money. Modern method considers time value of money. In traditional method, you will learn the payback period, whereas ARR, yes or no? Whereas in modern method, NPV, profitability index, discounted payback period, and IRR, right? All these methods we learn, but there are certain topics bit seems to be complex, but not really complex. But such a topics are picked from the investment decision and they kept in a separate chapter, separate box is called what? Advanced concept in investment decision. Here, the routine way to evaluate any project, we used to study or we used to calculate NPV. Of course, that topic also we are going to cover here. And we are going to take, how to take what decision? Another one is replacement decision is the investment part, and resolve conflict between NPV and IRR. And we used to study, what is that? Adjusted NPV. These are the certain core concept we used to study. But maximum NPV we already covered in capital budgeting. But the same problems we used to take and little bit we will add certain important factors. Here, what are the various advanced concepts to consider to evaluate a project? That is a most important point. Here, few advanced concepts. Here, already we discussed, but I am going to explain few more concepts, right? Can you answer? Coming to advanced concepts, sir. Point number one. What is the treatment of working capital? What is the treatment of working capital? I'm not asking from the chapter of working capital management. I'm asking chapter called capital budgeting. In capital budgeting, working capital is given. Then what is the treatment? Sir, fact is this: a company makes investment on fixed assets, sir. Along with making a fixed asset, sometimes fixed asset alone cannot generate return. In order to generate return from what asset? Fixed asset. Company has to make investment on current assets also. Directly they may say that current assets, working capital or inventory. They may use different word. What is that? Working capital, current assets and inventory. So whenever working capital is given in the problem, means you have to come to conclusion that fixed asset alone cannot generate return. For this, what is the treatment? Working capital, you should not forget one word, 100%. What is 100% is? Beginning we used to add to fixed asset and at the same time 100% we used to recover. Yes or no? I told you one dialogue, fixed asset may depreciate. Fixed asset depreciate, may disappear also, but current assets circulates will remain same. This topic we already covered, maybe in advanced concept, they may consider this one. Hello? Another one is, what is the treatment of depreciation? Depreciation is an non-cash expenses. When there is a tax, then they will consider depreciation. When there is no tax, we never consider depreciation. Depreciation can be calculated in two ways. One is SLM method, WDV method. In WDV method, to calculate WDV method, I told you some shortcut. Generally, asset gets depreciation. But to calculate depreciation, depreciation gets what? Depreciation. Okay, you learn this one. Do you know what is the variable cost ratio? Variable cost ratio, what is the formula? Variable cost divided by sales. Sir, what is this variable cost ratio conveys? In the sales, if it is 100 rupees, you are made a sale. From that, what is your direct cost? Variable cost also called what cost? Direct cost, or how much of cost you spend to give a shape to a raw material into finished product. That is a variable cost. Dear students, when variable cost increases, your contribution, what happens? Decreases. That means that you are spending a lot of money to produce the product itself. If the variable cost is less, then it is okay. Once variable cost ratio means, then you have to understand one more ratio. What is it? Contribution ratio. Contribution ratio formula? Contribution divided by sales. Or else one more shortcut, sir. 1 minus variable cost ratio equal to contribution. 1 minus variable cost ratio equal to contribution ratio. 1 minus contribution ratio equal to variable cost. Are you getting? Yeah. Another one is, do you know what do you mean by set off loss? Set off loss means what? Sir, if at all any year profit is there, particularly operating profit, generally that year company has to get what? Tax benefit. But if company bears the loss, then next year the company have an advantage that how much of loss the last year the company got, that entire loss can be shown in next year profit, and artificially we will reduce what? Taxable income. Once we pay tax, once income tax person went off, we will again add back to it. Okay. Then another one is when to use present value factor and when to use present value annuity factor. When multiple unequal cash inflow, single cash inflow is there, then we have to use what? Present value factor. When multiple equal cash inflows are there, then we will use what factor? Present value annuity factor. Got it? Yeah, this is also another important factor. Another one is, you have another most important point is, what is common cost? What is that? Common cost. What is a common cost? Let us take common cost means it is a cost incurred by the company, right? This is the common cost, indicates that. Let us simply, we will take an example. Sangam Dairy is producing milk oriented products. Now they are going to, recently they entered into the bread manufacturing also. Okay, bread manufacturing they entered. But in order to bread manufacturing, in the same plant itself, they allocated one building for manufacturing of bread. Now, what about the watchman salary? To calculate, they want to do the bread manufacturing, whether it is a worthable or not. For that example seems to be like this only. Applicable to all the people. See, common cost. Array, listen. Pay attention, because these costs are not available even in your material. If you pay attention 100%, right, sometimes you will automatically ignore because brain cannot carry. But the thing is, you have to make attention and you have to listen, and whatever the word I'm been making, you have to write. But here I'm writing, everything. Even check it in your material. Okay. Common cost. What is a common cost? You take a Sangam Dairy example. Sangam Dairy producing milk products. Suddenly, this is a Sangam Dairy factory in near Guntur, Ankod. So here, they've been producing milk-oriented products. Now the Sangam Dairy management thought that they want to produce bread also, right? Now breads also available, Sangam breads. Now the thing is, they are decided to purchase a machine, and whether that purchasing that machine is worthable or not, the management wants to make evaluation. So they took the investment is 40 lakhs rupees. and they used to made a sales. From the sales, they started to deduct variable cost. Yes. Fixed cost. Yes. Advertisement, of course, bread separately giving. Yes. But immediately the watchman salary is there here. Sir, watchman salary also will you consider a ignore? Why you ignore? That person also is there, You see, here the point what the financial management ICA Institute says, if you undertake this project, there is a watchman salary. If you don't undertake this project, there is a watchman salary. If you undertake, there is a certainly, what is that? Watchman salary. That cost is common cost. Your academic in charge is there and down. In your batch, the mastermind wants to note in order to run this fourth floor, how much profit we generated means they will take your fees and they will deduct all the cost. But your class in charge is there. His cost is specific cost. What is that? Specific cost. Because మన బతుకులు దేనికి కనెక్ట్ అవుతున్నారు అర్థం అవుతున్నాడు. వాచ్ ఇన్ఛార్జ్ అనగానే పులకరించిపోతుంది వాళ్ళు. Here you see, common cost, it indicates academic in charge is there, right? Academic in charge salary is what cost? Common cost. Whether this floor or next floor or whatever it may be, his salary would be remain common to all the batch. But whereas this concern in charge is there, that cost is specific cost. What financial management says, whatever the common cost is there, a layman and intelligent students, both the people observe what is the cost. But while calculating profit, you should not deduct a cost. You must deduct a cost. But which cost to be deducted, which cost not to be deducted is the most important. So there are two types of cost we have to study. One is a common cost. Another one is what cost? Specific cost. Specific cost. Now tell me which cost I should consider, which cost I should ignore. You have to consider what? Specific cost. Today in Inodu paper, there is a big ad with respect to Samsung mobile. Samsung mobile ad is given and they made it advertisement. This is a common cost or specific cost? Specific cost given for only mobiles. Now try to understand, tomorrow in Inodu paper, just Samsung, a brand of wonderful in India, just they given, that cost is common cost. That may applicable to mobiles, washing machine and everything. So when you are evaluating any project, being a financial management student, you have to understand which cost is common, which cost is specific. Here, generally, administrative expenses would be common. What is that? Administration expenses, or you can say admin overheads. Administration people generally work. These are administration overheads is common cost. This should be, what is that? Ignored or considered? Ignored. But specific cost must be considered. Okay, this is a common cost, specific cost. And there is another cost is called historical cost. What cost? Historical cost. Historical cost means what, sir? Say, suppose take one example. There is a ABC company. They want to construct a biggest project. In order to construct the biggest project and they want to buy a machine, that machine is worth of 500 crores. For the 500 crores machine they want to buy, and they've been thinking that whether this machine is worthable to import from overseas and how many units we are going to produce and what price we are going to sell and everything while making a calculation, right? Whether to buy a machine or to do manually, we made some research work. For the research work, we took some 20-30 members service and we provided certain amount to them to make some common survey, some research. For the research, company spent 20 lakhs rupees. After spending this 20 lakhs rupees, they came to know that instead of doing manually, it is better to go with what? Machine. Now they purchased the machine and produced the product, and they sold in the planning to sell in the market. In the sales, they have to find it out profit. In the process, they deducted variable cost. In the process, they deducted fixed cost, and immediately they got it. Sir, what about the research cost we spent? That cost should be considered or should be ignored? అందుకోసం నన్ను పంపించారు. Historical cost. This cost is absolutely ignored. The reason is that when you are evaluating NPV means it is the present value of future cash inflow. Na? Future cash inflow means future revenue minus future expenses you are going to deduct. This cost is already you incurred, which is nowhere concerned to future. Are you getting? Nowhere concerned to future. Research cost. This is the cost you already incurred. Gatam Gataha Baba. Whatever the cost before commencement of the project you incurred, that cost never comes in future. Because that is the cost with cost of what past. Even though that cost you incurred for the sake of project itself, you should not consider it. Because that cost is called what cost? Historical cost. What cost you have to, for example, you went to bank, and you asked 20 lakhs rupees loan in order to buy a machine. The banker certainly will ask, okay sir, 20 lakhs. Tell me sir, how this 20 lakhs you are going to use? Sir, I will purchase this 20 lakhs my machine. Okay. Tell me next. Sir, I will produce a product and I will sell in the market. Yes. Okay. What about variable cost? That is incurred, to be incurred, already incurred. To be incurred. Yes or no? From the future revenue, you have to deduct all the cost and you have to tell how much the profit you got it, right? So in the sales revenue, you used to deduct variable cost to be incurred, fixed cost to be incurred. Yes, you will find the profit. The tax you will deduct to be incurred. Hello? And the interest used to deduct in the form of discounting to be paid, right? What about the research cost, what you incurred 6 years back for the sake of same project? Will you consider? Will you ignore? We should ignore. This cost may not influence the future cash inflows of the project. That cost is called historical cost. This cost also called sunk cost. S-U-N-K, sunk cost. This cost is historical cost. It must be, what is it? Ignored. There are certain, you see, why I been considering this one means you have certain identity. Cost ante ఏం చేయాలి? డిడక్ట్ చేశారు అంతే. అవునా? మనకు తెలిసిన ఒపీనియన్. కాస్ట్ టు బి డిడక్టెడ్. No. What the cost nature is, in order to evaluate that project, is it influence with the future, with influence with the project? Common cost. It is not applicable to project. Okay? But whereas historical cost, it is applicable to project but not related to future. Because one is history, ignore. One is not for specific project. It is applicable for what? All. Are you getting? So this is the observation. So this cost to be, it must be, what is it? Ignored. Historical cost. What is the difference between these two? These are the two important points. Tell me. Sir, common cost means, sir, that is not applicable specifically for that concern project. That is the reason that cost to be ignored. Because if you take project, if you don't take project, so that cost is going to be there. Such a cost should be ignored. What about historical cost? Of course, that is applicable for our project that is already incurred. It is nowhere concerned to future of the concern of the project. Because you are the financial manager, you are evaluating whether investing on this project is really worthful or not. That is a historical cost or sunk cost. It must be ignored. Specific cost, it must be considered. Common cost, it should be ignored. Right. Thereafter, Navajeevan Hospital problem we discussed. Navajivani Hospital, where we discussed opportunity cost. There are two things are there. Opportunity cost benefit. Opportunity cost benefit means we have to add. Because of undertaking this project, not only getting directly revenue from the concerned project, because of investing in this project, outside an opportunity is creating and you are generating, what is it? Revenue means or income means, that is called opportunity cost benefit. That should be added. Whereas one more thing is there, that is opportunity cost loss. Opportunity cost loss would be there. That if it has loss should be there, that should be deducted. Okay. Opportunity cost benefit and opportunity cost loss. Means totally opportunity cost must be considered or ignored. Must be considered, that should not be ignored. That is the most important point to be considered. Are you getting? Then another important point is, what is the difference between profit and gain? Sir, from operating activity, whatever the thing you used to get, what? Profit. While selling another, see, when you purchase an asset, by using that asset, if you produce a product, hello? While purchasing an asset, while using that asset, if you produce the product, by selling that product in the market after overcoming its cost, whatever the benefit you used to get, it is called profit. And while selling the and purchased asset is called what? Gain. If you purchase the asset, you used over the period and you are selling more than the purchased price, okay, or written down value comparing to, then that is called, what is that? Gain. So gain is similar to post-mortem lantidi. Profit is similar to operational lantidi. Okay, these are the topics. If you consider, this should be you have to, by considering all the factors, you have to calculate NPV. Working capital treatment, you know, working capital depreciation treatment, variable cost ratio, contribution ratio, set of loss, yes, common cost. Common cost means what? You try to understand. If you undertake this project, there should be certain cost. If you don't undertake project, there should be certain cost or benefit, whatever it may be, nowhere concerned to this project. Because of this project, it is not going to increase. Because of this cost, it is not going to decrease. Such a cost happens that is not applicable for the project. It may be applicable for the company. That is the reason that cost should be ignored. Specific cost, yes, absolutely we have to consider, because it is applicable for only that specific project. Thereafter, historical cost or sunk cost. Before commencement of the project, whatever the cost you incurred, that cost is called sunk cost. That cost should be ignored. Opportunity cost benefit. Because of making investment in a project, an opportunity get created. Because of that, if you are getting benefit, that is an opportunity cost benefit. Let's add it. Opportunity cost loss. Because of undertaking a project, an opportunity losing its life. Because of that, you are not getting the benefit. So that is an opportunity cost loss that should be deducted. Be clear with respect to profit and gain. Whatever the asset you produced, whatever the asset you purchased, with the purchased asset, by using that asset, if you produce a product, by selling that products in the market, if you make benefit, that is called profit. While purchasing asset and selling at the end, if you get the benefit, it is called gain. The topic is over. Once you know all these things, you can take one problem, that is advanced concept oriented NPV problem. Problem seems to be nothing advanced, seems to be XYZ limited problem. You remember set of loss problem, brah. Similar problem only. Opportunity cost, sunk cost, working capital, allocated overheads. Allocated overheads means it costs what cost? Common cost. Additional investment you will make. Do you remember Cello Limited? Cello Limited, one project is there. See, in Cello Limited, what happened? Project same, but multiple payments. Okay, project same, but multiple payment. 80% payment we used to make in the beginning. Remaining 20% we will make at the end of first year. XYZ Limited problem. Project same, but multiple assets. One initial equipment is purchased 300 crores. But additional equipment is purchased at the end of third year from the cash inflow generated from the third year. Ani. Magazines. Okay. Means, you have to very clear. Asset same, multiple payment. Project same, multiple assets. Okay. Instead of this, better you write one thing. Last one is asset, single asset, multiple payments. Single asset. Single assets. Whereas in order to acquire, we used to make, what is it? Multiple payments. Example, you will take a Cello Limited problem. Where beginning 80% we used to pay, 20% at the end of the project. What to do? Whereas XYZ limited problem, single project, whereas multiple payments, single project, multiple assets. Do you remember initial equipment purchased 300 crores? XYZ limited problem, if you read, there we used to get two types of asset. One asset we will purchase in the beginning and another asset we purchased at the end of third year. So that's why these are the 14 points. By merging, by combining all these things, he may design. Calculator nalla vaadukudam amma. ఆ క్యాలిక్యులేటర్ చూసి వాళ్ళ అమ్మ కన్నీళ్ళు పెట్టుకుంటుంది. నా కూతురు చూడు ఎలా వాడిందో క్యాలిక్యులేటర్. వాడింది కదా కింద పడేసి. 14 points. By merging all the problem, one problem might be designed. Now you see, a company is currently receiving 2 per kgs from outside from selling waste generated by its manufacturing operation. The waste generated at normal operating capacity approximately 50 kgs per year. There is a company called ABC Limited. Let us take this problem. Problem number 1 maji. Here, what the problem is, just to visualize problem number 1. Here is the company. This company, generally they will produce, any company they will make a production, certainly they will release certain wastage. But here the company is, the wastage is how much? 50,000 wastage. So this is the wastage. ikkada nunchi ila wastage pothundu anukunnam. So here, how many kgs? 50,000 wastage. But actually what the company is doing here, company currently, the wastage whatever is there, that company is selling for 2 rupees. Hello? That means how much they've been getting? 1 lakh. 1 lakh they've been getting. Actually they've been happy. Because they've been generating this wastage, and the wastage, actually they've been, how many products they've been producing we don't know, but they've been concentrating that because this wastage company able to generate 1 lakh. Okay. Now the point is, after spending 1 lakh of research, why the research has to be done means either to reduce wastage, or is there any chance to convert this wastage into finished product. When I was a student, my professor used to say, hey, don't waste any product you purchased. Use and throw, Balu. Without using, how do you throw? But when I become a teacher, then I understood that why should I throw? My professor is wrong. He is wrong, absolutely wrong. He said use and throw. But I am saying that use in such a way that there should not be anything to throw. మొత్తం కొంతమంది ప్లేట్లు ఎలా తింటారో తెలుసు కదా. No need of vim soap. If you are a hostel means, try to observe today, there are certain people are there in such a DNA, they will save indirectly water come vim soap come timing also. That is, eating is nothing but what a beautifully they will eat, you know. There are certain people, maximum what that much, at least certain people are, right. After spending how much? 1 lakh on research cost, the company discovered that waste could be sold for 15 per kgs. It was processed further. But now they spent how much? 1 lakh rupee they spent on research in order to get whether this would be very beneficial or not. This 1 lakh is called what cost? Historical cost. While calculating this project NPV, should be considered a ignore, right? The company discovered that waste could be sold for how much? 15 per kg. It was processed further. Okay, additional process would require an investment of how much? 6 lakhs in new equipment. Cost of installation equipment would be 50,000. What is the cost actually? If this want to be sold for how much? Instead of wasting this wastage, what you have to do means, you have to make, what is that? Process. In order to process, you need a machine. What is the cost of machine? 6 lakhs rupees is the cost. What is the installation cost? 50,000. So in total, 6 lakh 50,000 is its cost. Now the company came to your office to know, sir, whether it is really worthful to spend how much? This 6 lakhs rupees on this given asset. Okay, a 6 lakh plus 50, 6 lakh 50,000. Is it beneficial to spend 6 lakh 50,000 on asset? So they came to your office and you are a CA and you have to make a evaluation. So the client conveyed that there is a what? Research cost they spent already how much? 1 lakh. 6 lakh in the equipment and cost and installation equipment would be 50%. Okay. 80% of purchase price of the equipment. 80% of purchase price. How much it would be? What is the cost of that? Its purchase price is 6 lakhs. Out of this 80%, 6 lakhs into 80%, it would be paid when? Will be paid on the spot. Immediately we used to pay. Remaining 20% will be paid at the end of first year. Now here the examiner wants to use what to do with this 20%. You have to bring into present. Will you use present value factor, annuity factor? Present value factor, because it is a single cash inflow. Hello? Yeah. And the machine could have estimated life of how many years? 10 years. So 10 years and no salvage value. No salvage value means we will calculate what would be the written down value. If the written down value is 0, okay, gross sale proceeds also 0, then no problem. But if written down value is there, still company unable to sell in the market, then automatically we will fight for what? Capital loss. Then we will show the capital loss because written down value is the 2 lakhs rupees, unable to sold. In such a case, this 1 lakh or 2 lakhs, whatever the amount we've been hoping, is nothing but capital loss. On the capital loss, we will try for what? Tax shield. Okay. And here the machine would be an estimated life for how many years? 10 years. By chance, if the 10 years same operating cash inflow will come, will you use present value factor or annuity factor? Annuity factor. You try to understand, if you want to solve this problem, you must have the conceptual clarity on various topics. Right. Depreciation would be calculated on straight line method. What is the straight line method formula? Cost minus scrap divided by life. Sir, even though formula is given, so we should not consider depreciation directly. Why? Because unless until if the tax details are not given, we are not going to consider it. But the thing is, depreciation formula, we know that cost minus scrap divided by life. The cost of advertising of the product would be 20,000 per year. It means that you are processing a product, you are selling in the market. Once you process the product means you have to create awareness about the product in the market. Hello? For that purpose, what to do? You have to give an advertisement. So here advertisement would be how much? 20,000 per year. Selling and administration expenses expected to be increased by how much? 30,000 if new product would be sold. The details of additional processing cost as follows. Variable cost 7 per kgs. Waste put into the process. 7 per kgs, which is put into the process, means whatever the wastage you've been considered in order to produce the product, on that you have to take how much? 7 rupees per kg. Fixed cost 1 lakh including depreciation, similar to Cello Limited problem. In that Cello Limited problem also he has given same word but ignored which one? Tax. In that case what happened? We have taken fixed cost including depreciation. I remember 40,000 I think so. Where depreciation will be 19,000, fixed cost exclusively we got it, depreciation 21,000 something we got it. So same problem, that point he been using here. And fixed cost including depreciation. If you deduct a fixed cost 1 lakh means without touching PBDT directly will come to PBT. Why? Because you deducted directly, right? And there will be no loss in processing. Very good. And it is estimated that total waste processed in each year will be sold in the same year. Which year you are going to process in the same year you are going to make a sale. And estimates indicate that 40,000 kgs of the product could be sold. Actually, what is the wastage? 50,000. So 50,000 would be your wastage. But actually you've been getting how much? 40,000 only. What about the remaining 10,000? That is nowhere concerned to our project, because you are spending how much? 6 lakhs rupees, right? 6 lakhs rupees you are spending, 50,000 is the wastage, but it is taking only 40,000. Now you have to take a decision because of 40,000 process. It is not taking entirely 50. It is taking, in the 50, it is taking just 40,000. For only it has a capacity of 40,000. For 40,000 processing is its capacity. For that, you are going to ready to spend how much? 6 lakhs rupees. Arey, think here whether it is really worthwhile or not. The client came to your office and he's saying, sir, I have a 50,000, sir, but my machine could not take entire 50. Just it is only 40. Now he will ask question number 1. Sir, what about the 10,000? Sir, the 10,000 nowhere concerned to this machine. If you purchase that machine, if your job is to what? To determine profit and loss account of the company, or to tell whether this machine is worthwhile to buy or not. You have to tell that spending this 6 lakhs rupees worth of machine is really worthwhile or not. You should not take a total expenses on the shoulder of the machine. Whatever the expenses which are concerned to which one? That concerned machine you have to consider. You see, if you take 40,000, you have wonderful benefit. What the benefit, 40,000 you can process, you can sell at 15 rupees. Hello? 15 rupees, right? So that means 40,000 into 15. 6 lakhs you are going to get it. From the 6 lakhs never comes to your pocket. You have to deduct certain cost. What cost you are going to deduct? Variable cost you have to deduct. Variable cost is put into the process means how many kgs you put? 40,000. 40,000 into 7. Good. What about the 1 lakh? Will you consider ignore? Ignore allow the I'm fixed cost 1 lakh. Fixed 1 lakh. It should be considered because for the processing you are using. What about 1 lakh of research cost? Why? Historical cost it should be. That's the reason you have to ignore. And in the problem, what about the 10,000, sir? That is my important point. Sir, 50,000 wastage only, no, sir. 40,000 only you have taken. What about the 10,000? See, already if you purchase this machine, that 10,000 you can sell. If you won't buy also, that 10,000 you used to sell, right? Because it's nowhere concerned to this one. That is indirectly a common expenses. Nowhere concerned to this project. That's the reason you should not consider it. What about the depreciation, sir? Depreciation should be considered or ignored. That depends upon tax. If you see the management, when confronted with the choice of disposing waste or processing it further and selling it, seeks your advice. Okay, they're seeking your advice. Which alternative would you recommend? Assuming that firm cost of capital is how much? 15% is nothing but a discounting rate. What about the tax rate is how much? 50% is the tax rate. And you should consider present value annuity factor. You see the table also given in this problem. So past, I think, examination question, I think so. This is MTB, they given study material problem 13 and added few points. This is the problem to be analyzed. How do you solve this one? Sir, this project should be evaluated. How do you solve? Roughly, you can calculate. Step number 1, estimation of cash outflow. What, Maji? Estimation of cash outflow. Sir, asset is purchased for how much, sir? 6 lakhs. But 6 lakhs we should not show directly, no, sir. So here, asset is purchased 6 lakhs, sir. 50,000 installation. But he clearly mentioned EMI is applicable for only asset, for not installation charges. When you don't have a money in your pocket, I am dealing with the crores of rupees in front of you. How funny it is. Kada? Problem solved. Take your advanced Forget the days where I started payback period. That is the capital budgeting. This is what? Advanced capital budgeting. After interval it is. Now I will tell you. Roughly you can calculate. So it is, here. What do you do? Problem number 1. Evaluation of a project. Evaluation of a project. Basing on, kya Maji? Basing on NPV. So basing on NPV. What do you do? Step number 1. Calculation of PV of cash outflow. Yes or no? Cash outflows. You have to take a table. You make a particulars. You take a amount. Yeah. Point number one. 80% of cost of machine paid on spot. He used word on spot, right? So that means you purchased asset is 6 lakhs. 6 lakhs में कितना मजी? 80%. कितना आएगा? 4 lakh 80,000. Then what you do means B, present value of 20% of cost of machine. 20% of cost of machine. When paid at the end of first year. So at the end of first year means what do you do, man? Balu sir, actually 6 lakhs, sir. From the 6 lakhs, kitna sir? 20%, sir. This 20% we are going to make a payment when, sir? At the end of first year. To do first year means what the factor value, sir? 15%. 1 divided by 1.12. 869. If you 0. Okay. If you multiply this one, 1,04,000. 280. Another one is you have to see add installation cost. Installation cost kitna maji? 50,000. Maji, if you sum it up all these things, you used to get the PV of cash outflow. 6,24,000. 34,000. 80. Yeah. Then you have to calculate. Alright, listen carefully. I will give you time. No problem. First, observe the problem, how I am doing. Tell me what we are going to do next. Sir, it is a better because you are going to calculate operating cash inflow, sir. That is the reason. Do working note. What is it? Calculation of depreciation per annum. Depreciation per annum. Hello, why you are calculating depreciation? Already he deducted, You have to add back, kada. Depreciation equal to cost plus cost of machine actually minus scrap value divided by life. What is your cost of machine means including installation? Yeah, 6,50,000. 6,50,000 minus 0 divided by kitna maji? 10 years. How much? 65,000. Next you have to enter into the step number 3. Step number 3 is to yes, because another was working note. Calculation of PV of operating cash inflow. How many years actually? 10 years. So year 1 to year 10 you take it, right? And you can take a particulars. Yes, Maji. Now you can take a sales revenue 40K into 15, right? How much? From 6 lakhs you have to deduct all the cost, right? What are the cost you supposed to deduct? So B, less variable cost. How much variable cost? 40K into 7 rupees. 2,80,000. See, less fixed cost which is given, right? Fixed cost including including depreciation. Kitna? 1 lakh. Then D, less. No, there are certain expenses are there, ma'am. Advertisement expenses are there. Advertisement. Kitna maji? 20,000. Thereafter, one more expense also is there. Admin expenses. How much? Is there any other expenses? Sir, 1 lakh. But then, is there any expenses to be deducted? Yes or no? Is there any expenses? What is that opportunity? Opportunity and ever. Shall I call my Amamma? Yes, sir. Sir, I will tell you, sir. Is there any cost to be deducted? That is my question. Yes. Anybody, please. I hate common cost, right? At the same time, common sound also I hate. Specific. Sir, I will tell you, sir. I will tell you. Anybody? Stand up. Kada? Adi. What are opportunity cost? Opportunity cost loss? Where is loss, man? One lakh how, man? Yes, sir. Anybody? Array. Crowd, I don't. Yes, anybody. Only chippadga. Yes, 40,000. How 40,000? 40,000, why ma? Where it is a 40,000? Actually, you try to understand. Yes, there is a opportunity cost. Loss is there. Why? Because so far you been getting on 40,000 2 rupees benefit. If you undertake this project, very good ma. You also. But you took 50,000, right? But the point is, so far we been getting 40,000 into 2 rupees. Same logic, Navajivan Hospital. We used to refer to another test center is there. There we used to get it at 35,000 rupees as an income. What we say, in the problem, if you purchase this machine, automatically that connection gets cancelled and you lose that benefit. But here also, you've been selling an asset wastage for 2 rupees. You are being getting. But once you want to process this one, you will lose what? That 2 rupees there. Are you getting? Since 40,000 would be opportunity cost, loss or benefit? Loss. Less, what is that? Loss of sales revenue. Loss of sales on wastage. How much? 40,000 into 2 rupees. Many of the students may feel it is one of the doubt. Loss of sales on wastage. 40,000. How much? 80,000. Once you deduct all these things, you will get, what is that? PBT. How much? 90. PBT. Less tax at 50%. 45,000. You will get, what is it? PAT. Profit after tax. Kitna maji? 45,000. Now what to do? Add depreciation. Depreciation 60. What about the CFAT? 1 lakh? 1 lakh 10,000. अभी क्या करना है? इसको प्रेजेंट में लाना है. Yes. So now what you do means sum of present value of operating cash inflow equal to 1,10,000 into present value annuity factor 15% 10 years. That means 1,10,000 into 5.019. If you multiply it, 5 lakh 5 lakh 52,090 na 090. And step number 3, terminal cash inflow is 0, I think so. Step number, what is that? 4, 3. So step number 3, PV of terminal cash inflow equal to 0. Why? Because you purchased asset for how much? 6,50,000 in ora. Every year 65,000, no scrap value. 65,000 into 10, 6,50,000. There they gone. And finally, you can calculate NPV. NPV equals to step number 4, calculation of NPV. NPV equal to PV of sum of operating cash inflow plus PV of terminal cash inflow minus PV of cash outflow. That means Maji कितना आया 5,52,090 plus 0 minus 280 na NPV 80 190 na negative. So hence the project, whose class? Our class up to law class. Oh, that is nothing but no problem. 82,190. Check the answer. Maybe factor value might be difference. So since NPV is positive, this negative. So project should be accepted or rejected. Yeah, decision making. Okay. However, I will give you time tomorrow to make it note. Sir been waiting, I think so. Since NPV is negative, it is not beneficial to accept the project. Jai Hind.